Hello.
Yeah, Vishal, please start.
Okay. Uh, can everybody see the screen?
Yeah, it's loud and clear. Please come. Yeah, it's on.
All right. Okay. So today we're going to talk about RSI, new insights. Just a brief intro about myself. I am Vishal Markan, CMT. Been a trader since I was 16 years old. So almost 18 years I've been trading, and I have my own training institute, and I am a faculty at Bombay Stock Exchange, National Stock Exchange, corporate trainings for DSP, Merrill Lynch, Morgan Stanley, Bank of America, and management institutes like IIM and Goa Institute of Management. And today I have been certified by Steve Nisson for Candlestick Expert Trainer. And today we are going to talk about RSI, the new insights, what everybody who is into technical analysis must have come across RSI, and most of them use also. But there is a lot more to it, I guess, which I was not aware for quite some time. Till that time, I was using normal RSI, divergence, and overbought, oversold areas, but which I think is only 20% of it, and which may not work well in all kinds of markets. And then I discovered the new insights on RSI, which is further which was invented by Mr. Andrew Cardwell, and he had come up with two new concepts of RSI, which is called the range shift behavior and the reverse divergences. And since then, last 6 to 7 years, I've been working continuously on RSI, and that is my primary and predominant tool for all kinds of trading and training. So let's look at what is range shift behavior. It's an unconventional usage. I hardly there is any book on this kind of this range shift and reverse divergences. So let's look at it. First we will look at the range shift behavior in the first part, and then second part we'll look at reverse divergences. And if we have more time, we can look for any questions and answers. So let's look at range. Is what does the normal conventional usage of RSI say is normally people use is 70-30 as overbought oversold or 80-20 as overbought oversold, which was founded originally by Wells Wilder. The RSI is originally founded by Wells Wilder, so that is the conventional usage. But what does Mr. Andrew Caldwell suggest is that markets behave differently in different markets and they follow different ranges. So in a bullish market, the range becomes 40 and 80. That means for a bullish market, 40 becomes oversold and 80 becomes overbought. And in a bearish market, RSI tracks a range of 65 to 30. So in a bearish market, 60-65 itself is overbought. We don't have to wait for 70 or 80. So when you divide the range into this form, then it further helps us to understand what the market is, what the trend is. Now let's understand this chart, where you can see the uptrend. The lines which are drawn on RSI are not 70-30, but they are 40-60. Why 40-60? Because 40-60 is the common ground between bullish and bearish range. So that is the lines which we have been drawn. Now if you look at the uptrend, in an uptrend, market never goes below 40. It takes support on 40 so many times. And in a downtrend, it does not go above 60-65. Now 60-65 has been used interchangeably because there are some stocks who follow 65 and some stocks follow 60. So broadly we can use that range or that zone as a resistance in a downtrend. So there is a different range for bull market, there is a different range for bear market, and how market really change from bull to bear or bullish to bearish by doing a range shift. Now how do we look at range shift is the next chart which will show you. Bullish from down to up, how does the range shift happen? When there is a first leg where the RSI is below 40, and the second leg records a RSI which is above 40, takes support on 40. That is called as a bullish range shift. Now let's look at the chart. Now in this chart, if you look at the trend, it is completely down in the first part where the red arrow is marked. And if you see the bottom, there are three bottoms of the same, so around the same level. But if you look at RSI, at the third bottom, it takes support on 40, which is the point A, which suggests that there is a bull range. At 40, when market does not go below 40, what does it mean? 40 is the lowest part of bullish range. And if it does not go below 40, that means I am bullish. I am no more bearish. So that 40, that A point is a buy point, or it is a trend change point. At least the logical target for the RSI next is going to be 60, and that's why it touches and comes back. And then again at the right side of it, again you see a downtrend where you see point B. That is also a range shift. After that, market gets into a sideways mode, which is 40-60, 40-60. So whenever markets are moving between 40-60, it is supposed to be sideways market. When they are tracking 40-80, it is supposed to be bullish market. And when they are tracking 60-30 or 60-20, they are supposed to be in a bearish market. So this is a bullish range shift in the market. And now let's look at the bearish range shift. When the uptrend having a first leg which is above 70-75 and the second leg fails to go above 60-65, that is called as a bearish range shift. Let's check the chart here. There is a strong uptrend going on where the market does not break 40 earlier, and then it goes all the way to 70-75. And now look at the second top, which is almost near to the highest top, where the point A is marked. And that time, though market is almost near the high, RSI is not ready to go above 60. That means what? 60 is the highest point, highest level where a bear market can go. That means now this stock has entered into a bearish range. So now my next target would be 40, and this would be my exit long position, as well as I can go short on this. So 40-60, 40-60, and then it finally breaks 40 also, and the trend changes to down. Now if you look at this, how clearly, when you look at this 40-60 thing, you can clearly define whether the trend is bullish, sideways, or bearish. There is no overbought, oversold zone here. Means there is no 70-30 here. Above 60 it is bullish, below 40 it is bearish, between 40-60 it is sideways. So that clearly defines the trend. And this particular formula, this particular thing works on every time frame. 5-minute chart, 15-minute chart, 1 hour, 4 hour, daily, weekly, monthly, everything. So let's look at one chart which is like a weekly chart of Tata Steel. And it's spread out across 4 years, like say 2004, 5, 6, 7, 8, 9, up to 8. And if you look at, there are numbers which are marked, and you get the range, how it follows. Just observe the chart for 1 minute and look at the numbers, how the range is moving and how the price is moving, and then I will explain you the same. Just 1 minute, you can observe the same thing. हमारे 10 दिखा है recorded. Okay, now let's look at point 1. Point 1 takes support on 40, that means trend is not bearish, it is bullish. So my next target would be 60. So it goes to point 2, which is 60, takes resistance for some time, and then manages to cross 60. And at point 3, if you see, it takes support on 60. Now taking resistance on 60 is bearish, but taking support on 60 means extremely bullish. That means what? 60 is the highest level where a bear market can go, and in this case market is not even going to touch below 60. That means it is extremely bullish. Above 60 is extremely bullish. So 3 is my buying point or addition point, if I am holding the position. Even 4 is a buying point. Then it goes below 60 but does not break 40. So now you look at 5, 6, 7, 8, complete sideways market on price as well as RSI, 40, 40, 60, 40, 60. Then again it crosses 8, it gets bullish. So throughout this period, nowhere it has broken 40 in spite of deep corrections, anything. So that means the trend on this weekly chart remains bullish only through till 2007 or the end part of 2007. So then go to 9, again it takes support on 40. So that can be a very low risk buy for you. Then 10, extremely bullish because that takes support on 60. Then 11 says still bullish, no problem as of now. And at 12, it says I am no more bullish. Now if you look at the 12 point, it is almost near the top. It's like a double top. So that's where you get an exit on your stock, and as well as you can plan a short with a further confirmation, which we will see later. So at 12 I get an exit which is almost near the top, and then it goes all the way to 40, and at point 13 it breaks 40 also, and that's the first time in last 4.5 years it has broken 40 and the trend gets bearish, and then see the decline it gives at the end of the chart. So this is a weekly chart of 4 years on Tata Steel. Now we look at the same chart on monthly BHALE monthly chart, which is from 1995 till 2010, and the scale is log scale, so just check the price on that. Now look at, just observe this chart again for a minute and then I can explain this. It's the same thing. Now look at this, at point 1 it takes support on 40, that means not bearish. Then it goes up to 2 above 60 and takes support on 60, which is point 2, which means extremely bullish. That's a fresh buy at point 2. Then it goes all the way to 80 plus, comes back, and then it takes resistance at 60 at point 3, where if you can see the price is very near to the high, and at point 3 it says I am no more bullish in the market. The chart is not bullish. So that is your exit point out of your long, as well as it can be a short. So 3, 4, 5, 6, 7 is all sideways, and in between it got down below 40 also, that was bearish. Then again took support on 48.6, which is says no more bearish also. And at point 7 it goes above 60 after 5 years, 98, 99, 2000, 2001, 2002. 5 years, that says extremely bullish. And the best part is when there is a dip in 2004 on point 8, that's your fresh buy, because it takes support on 60, which again says extremely bullish. After 2 years in 2007, you get one more decline to 60, which is 0.9, extremely bullish. So from 2003 till 2008, RSI is continuously above 60 for 4 years. That means it's into a strong trend up. And look at the price all the way from like 200 rupees, it went to 2,500 rupees. That's a log scale which I have plotted. Now at point 10, what we have to say is when it breaks 60, now breaking of 60 does not mean anything bearish, but you have to always think in terms of relative. Now when you see that RSI was continuously above 60 for 4 years, and now it is breaking 60, that means it is not as strong as it used to be. So that can be taken as to get out of your position. And then you see at the end of the chart, which is not marked, near 2010, it makes a similar high, almost similar high, but it does not cross 60, 65. and then comes back, and then this is a Bale chart. Now you know what is Bale doing at current price levels. The RSI of monthly RSI of Bale is below 40 since last 1.5 2 years. It is completely bearish stock, extremely bearish stock, and every rally is a short for Bale. So that's your weekly and monthly chart, which you can plot the same thing again and see the same effect on that. Now I'll show you some more charts where you can see those ranges. See, this is chart of KTK Bank in early 2013. So how that arrow which is marked which says no more bullish, not going above 60. So that says that is my exit and maybe even short. Then it goes all the way to 40, takes support for some time and then breaks 40 also. That's extremely bearish. So you clearly know the trend. If you follow this, I guarantee that after this session, your markets will not be the same for you. If you have not been following this, you are not aware about this concept of range shift in RSI, and now you are knowing this. If you learn this properly, markets will completely change. It will become much easier to trade and know the trend rather than using those 70-30 overbought oversold. Let's look at the other part is other chart, Nifty on daily in early 2013. See that blue arrow which says earlier it was making highs which were above 60, then it started coming down, and then at 60 it took resistance, says I am no more bullish. It goes all the way to 40 and then breaks 40 also. And the earlier uptrend, if you see, all the time it has taken support on 40. So all those opportunities were for buy. Taking support on 40 is a buy. Taking resistance at 60 is a sell. See, the bullish range started in September in the first arrow chart. From first arrow, taking support at 40, goes all the way to 75, comes back to 40, in between goes sideways between 40-60, again gets bullish. Then at the end of the second last arrow, you have that bearish range shift, says no more bullish, price almost the high, and then in the last arrow, it breaks 40 after a long period of time, saying now I am completely bearish. So you can divide, it clearly defines the trend very clearly. This is the monthly chart of Nifty. And you know why market is not able to cross this 6300 levels. This is sometime back in the early 2013, but since then again it has tried to cross 60 in last 2-3 attempts, but it has not crossed that. So if you see broadly from 2009 to 2013 till now, it is broadly in a sideways market, 40-60. Though it may be looking very big movement in terms of 5500 and 6200, but on a monthly chart, Nifty is doing absolutely nothing. That's a sideways market for Nifty. Look at the first trend when we were into 2005, 6 and 7, when the RSI was above 60, and every time it comes to 60, it used to take support on 60. That's extremely bullish, and that is the real trend. Right now, it is not able to cross 60. Every time it goes there, it shows a bearish candle. To this month also, we have a bearish candle at November candle, which is bearish at the same level of 60. So once we cross 60 conclusively and stay there, then only we can expect some big movement on the upside. Otherwise, it will remain in this range of 40-60, and that range could be between 5200 and 6200. It is very good if it stays there, because the longer, the bigger the consolidation, stronger the trend it will follow. So there should not be any hurry on getting aggressive right now. Let it cross 60, let it stay there. Maybe 1 month, let it go, and then see how it sustains. Many a time it pokes above 60 for a month and then comes back immediately. That could be like a false trap also. So as of now, Nifty is poised at this level. This is again, look at this chart, which is weekly chart of Reliance Infra. Now, as per the price, we can see that what it is forming is a pattern called triangle. It's lower tops and higher bottoms, and the same thing is indicated on RSI. It does not cross 60, it does not cross 40. 40, 60, 40, 60 3 times, and that's complete triangle. And if you see this, what happened after this? This data is still 2013 earlier. So once you see that data right now, you can see that once it breaks that triangle, it also breaks 40, which is extremely bearish, and that triangle target is achieved, which is almost 150 rupees on this stock, which can be 35% on that. So that is the power of range on this. So in short, what we can define now, this could be a very handy thing if you want to note down, is uptrend is 40-80, strong uptrend is 60-80, downtrend is 65-20, strong downtrend is 40-20, and sideways is 40-60. So when you have a support at 40, it is bullish. When you have a support at 60, it is extremely bullish. When you have a resistance at 60, it is bearish. When you have a resistance at 40, it is extremely bearish. So I guess we have completed one part of it. Should I call for any questions right now, or we do questions at the end?
At the end.
At the end? All right. Okay, let's take the next concept. Remember, what I am giving you right now in a span of 20 minutes is not that much only. It is not that easy or that simple also. It takes a lot of time, and I've been working on this since last 5-6 years. But once you get into this concept of range, markets will completely change. In our class, we take this particular RSI session for one full day, from morning 9 o'clock till 5 o'clock. It's an 8-hour session, and still people have problem and confusion on this, which takes further study. So I just give a disclaimer that you should not use it on the face value from tomorrow. Get deeper into it, read something about it, see a couple of videos. I have a couple of YouTube videos on the same on RSI, which is there on my website or YouTube channel, and get deeper into this, and then there is a lot of stuff which you can do in this. Now one more trick I can show you. One more, what we do is at our training institute, we rate the signals. We don't take every 40 support is not the best buy. So we have rated the signals into 1 star, 2 star, 3 star, 4 star and 5 star, and one 7-star signal. Now I'll tell you one particular star, like 5-star trade. How does a 5-star trade happen? So let's check one chart. I'll show you a practical example of my chart, and I hope that is going to help you a lot in this. So we look at Reliance Infra chart, and what I do is I generally look at 3 time frames. 3 time frames is monthly, weekly and daily. So if you see this right now, I have clicked on monthly, and I look at the RSI part, which it went below 40 for 1 year, which was 2011 and 12. So I mark my horizontal lines on that, vertical lines on that. When RSI was below 40, so this red lines denote that market is completely bearish on monthly side, monthly chart, because it is below 40. Now I switch to weekly chart and go into that same zone where I saw that. Now this 2 red lines suggest that the monthly RSI is below 40. Now I will draw 2 more lines which will say weekly RSI is below 40, which will be, say, blue lines. Weekly RSI goes below 40 from this candle, and it stays below 40 till this point of time. So now you know that this is my zone where weekly as well as monthly RSI is below 40. That's extremely bearish on the market. Right now I have to find out shorting opportunities from the daily chart. Now let's look at daily chart from the same part. Now this is that zone where blue line and red lines are drawn on the RSI, which suggests that this is the area of my shorting period. This complete zone is going to be my shorting zone for this stock. So when did it start? Is somewhere at the price of somewhere near 1000 rupees when it got into that short zone, and when it came out of it, it was around first would be this blue line would be somewhere around 400. So from this 1000 area till 400, I can stay short and hold on also, or I can keep taking shorting opportunities, book profit and again short. Now let's see where would be my 5-star sell signal. 5-star sell signal as per Malkan's view is what? When you have RSI where monthly and weekly are already below 40, that's extremely bearish. So in daily, if the trend is really bearish, what is the highest point it can go? Is 60, because if it crosses 60, then the trend changes. So every time it comes to 60 on daily is my short. That's 1, that's 2, that's 3, that's 4. So those are my shorting trades, which will be from first, second, third and fourth. And if you see that after every dip, even I can take this, because in this case monthly was not below 40 but weekly was, so it may not be 5-star for me, it may be a 3-star for me. So that is also good. So that was my first trade. So all these moves are not less than 25%. 4 trades in 1 year, which gives more than 25% on each trade with very, very low risk. Because what is your risk? When you are shorting near 60, your risk is only like 2-3% or max 5%, because if it crosses 60 and sustains, that means the trend has changed, right? So then I don't go short, I can take out my short. And these are the 5 trades which are very good. There can be another trades which can be good, which will be where RSI takes resistance on 40 also. Resistance on 40 is extremely bearish. So those are also my trades for short. So apart from those 5 best trades which are 5-star, I can short near 40 also. And that's extremely bearish. What is the key here is how I can catch this. I get into this short trade after it touches 1000 levels. So what is our principle is, I want to only trade in the direction of the trend which is already very well established. How it can be proved is, I am only trading when your monthly RSI is going below 40. So by the time monthly RSI goes below 40, the trend is already existing and it is established well, and that's where I am going to trade. I am not interested in catching the top. If you look at this stock, the decline started somewhere around 1400, but I started shorting after it went below 1000. So 40% I have let it go. By the time it goes below 40%, then the trade setup comes for me to short, because I want weekly, monthly and daily to be in sync. That's my 5-star trade. Here we are trading with probability, so I need the highest probability to make money. So this is 5-star bullish bearish trade, where your monthly, weekly and daily RSI are all in sync. And that's exactly what you should be doing, whether you are using MACD, whether you are using stochastic, whether you are using ADX or candlestick or Bollinger Band. You should always use from higher time frame to lower time frame. And that's the thumb rule of technical analysis, which says higher time frame rules. Second is, don't go against the trend, trade with the direction of the trend. So when I'm looking at 5-star trade, as per me, I am already trading in the direction of the trend. So although we say that RSI is a trend anticipator, or all momentum oscillators are trend anticipator and moving averages are trend following, but I use RSI which is like a trend following only, because I'm only shorting a stock after it gets in below 40 on monthly, weekly. So then I'm using a trend following system on RSI. So that's my 5-star sell setup, which we do on RSI, and the exactly same would be on buy side. Let's check one buy side. Is, say, one extremely bullish stock would be, say, right now. Uh, let's check which is going strongly up. Hindustan Lever. Or let's check Tech Mahindra. That's our favorite stock. Now, if you look at this chart right now, Tech Mahindra. Again, I do the same thing. I mark down the arrows, the vertical lines where RSI has gone above 40, 60 on monthly chart. Now, if you look at that, RSI is above 60 here. So this has gone into my 5-star category of buying. Now I turn to weekly. Weekly is also above 40 till this point of time, above 60, sorry, which is up to this point of time. And then from here again it turns up. And till now it is up. So that is my weekly chart. And then I go into daily to buy. Where would be my buy? Every time it comes to 40 is a buy. So that would be, one is here. This is like, this area is not 5-star because here weekly was not above 60, but it can be still called as a 3-star signal. Somewhere here, taking support on 60, extremely bullish. My weekly, monthly are already safe above 60, and then I'm taking support on 60 on daily also. That's my buy. And this is as of now. Yesterday, 2 days back also it was a buy. So this will not give you any trouble if you are long in this, in spite of market corrections. And you can see that in spite of market correcting in between from 6200 to 5100, this didn't get affected because it is extremely bullish on monthly, weekly and daily, and it's a 5-star stock to buy. So every time it comes to 40 or 60 is going to be my buy point. So here also my 3-star, 4-star signal was there to buy, because in this area weekly was not supporting but monthly was. So that's how we rate our signals. That's how you should trade. Not every trade we can trade in the same quantity, in the same manner. According to market, market get aggressive, market get defensive, market get sideways, market get trended. In that way, we have to change our gears from first gear to fifth gear. You can't trade the same way all the time. So when it gets into 5-star mode, when all your 3 RSIs are above 60, that means it is buy and hold situation. That is like an investment stock if you are holding. Now if you look at this becomes a buy and hold on monthly since it crossed $1,000. Tech Mahindra. Now I'll show you one recent stock which went into our 5-star category. Let's check an Arvind Mill. Weekly above 60, and then see this daily taking support on 40, near 40, taking support at 60, and mind you, today it took support and went up. Today Arvind Mill was up by 3%, and today's candle is not uploaded here because that's an EOD software. So every time it comes to 60, it is a buy for me with a very low risk. So that's the current 5-star stock which is going on, and there are many in this market. So there are many opportunities. Even one can look at Tata Motors. Now you look at this monthly above 60. This is monthly chart. Then weekly above 60, and daily taking support at 40 was my 5-star buy. So you had a buy here at 360. Now it is 400. Low risk, higher probability, and in the direction of the trend, all 3 trends up. So that's the way we trade in market, and that's the main part of our trading and training. Now I'll show you one more concept of RSI, which is called as reverse divergence. Now we generally look at divergence We generally look at divergence. Just 1 second, 1 second. Uh, Ashish, are you there?
Yes, I'm there.
What is there is I am in touch with Mr. Andrew Cardwell,
Oh,
and
great.
he also wants to attend this seminar. So
Okay.
I want to send this link to him. Uh,
Okay.
can you just mail me?
Sure, I can on the right hand side I can post the YouTube link because he wouldn't be able to join the direct link because 10 is the maximum count which is available and
All
allowed.
right.
So he
So
can
can you
join the
just
yeah.
can you mail me that YouTube link?
Okay. On the right hand side also I pasted it and I'm sending you on Facebook also.
All right. Just 1 minute. I'll take 1 minute.
Sure.
All right. It would be a pleasure if he joins us. He must be watching me because I've been also a student of him, where I've learned all this, and he is the guru of RSI. Let's check the other concept called reverse divergence. Now, what we have seen till now is normal divergence is when price makes a new high and RSI does not make a new high. It means trend is exhausting. Trend is at exhaustion. Now, what I would say is something like which will maybe a surprising or a shocking thing for you when it says, I say whenever there is a divergence in the market, that means trend is strong. I'll repeat. If there is a divergence in the trend, that does not mean trend is weak. It means trend is strong. And I'm sure that some of you might not be able to digest this as of now. So I'll prove that. Just a common sense that why, first of all, why does a divergence appear in the market? What happens is we are using a 14-day RSI, okay, and we are tracking it on the market on several stocks and Nifty and Bank Nifty. When the market gets trended and it goes beyond 14 days, if it goes up by 14 days, RSI will go up to 75, 80 levels. But market does not know that we are following 14 days RSI. It can have any number of trends, any period of trend. So if the market gets stronger for 1 month, 2 months, and market can go anywhere, price can go anywhere, there is no band on it, but RSI has a band. RSI cannot go above 100. So when markets get stronger than more than 20, 30 days, then it means there has to be a divergence. And if there has to be a divergence, divergence proves what? That trend is very strong. If there is no divergence, trend is not strong. I guess I think you are getting it. What I'm trying to say. If there is no divergence, trend is not strong. Without divergence, trend cannot be strong. So I am no more, since I have learned this, I never ever give that much importance to the divergence part. I have tested also, I've tried also, and many a times, how many times you must have seen that there is a divergence and market does not go down. There, of course, there is some importance to divergence. There is particular way of trading divergence, and in under certain conditions only. You can't trade divergence, all the divergence. So we are not covering divergence right now. We'll be looking at the reverse divergence. Now, what is reverse divergence is compared to normal divergence when price makes a new extreme. Here, RSI makes a new extreme. So what does it mean? That when market does not make a new high, but RSI makes a new high. So let's see what it actually means. This reverse divergence concept has been discovered by Mr. Andrew Cardwell as applied to RSI, and it says price makes lower high and RSI makes higher high, and vice versa. Now let me show you in chart so it will make things much more clearer. RSI will move to a new swing low B compared to the previous. Let's check the chart here. Look at this. Price at point A. At point A, I have used certain momentum or certain pressure, which is point A on RSI. Then at point B, I am applying greater pressure on the downside. In spite of that, I am not able to break A. That means what? It is bullish. This is known as positive reversal or positive reverse divergence, which is bullish. And the most important part about this is it appears in an uptrend. What I found problem with the normal divergence is what? That whenever you have a divergence, you have a bullish divergence in a bearish trend and you have a bearish divergence in a bullish trend. That means if you are using divergence, you are trying to go against the main trend. Whereas when I am using normal reverse divergence, I am going with the trend. Now let me show you a chart. Reverse divergence on positive. Look at this. ABC. In an uptrend, the trend is up clearly defined. In an uptrend, your point B is higher than point A in terms of price, and also C is higher than B in terms of price. But your point B in terms of RSI is lower than point A. That means the pressure, the momentum, the force was higher at point B. In spite of that, we didn't break A on price. That means what? It is bullish. That's positive reversal. And again at point C, which is lower than B on RSI but higher on price, that means it is extremely bullish. It's a positive reversal. Now what does this mean is, this is where the overbought oversold concept comes in picture. The overbought oversold concept, which the contemporary or the conventional people or the normal books say is completely different from what we use. Markets never get overbought in an uptrend and it never gets oversold in a downtrend. Markets gets oversold in an uptrend. So at this point B is an oversold area. Why? Because it is lower than A on RSI in spite of not breaking on price. That means momentum has got into oversold and price has not. That means it is bullish. This is slightly different if you have not used this. It will take some time to digest and it will take some time to get through this. So I recommend you to go through this or read about this and then only practice. And initially it may be very confusing because your eye is trained to see normal divergence. Here also there are normal divergence if you compare the highs. And if you see what happened, ultimately market went up. So all your divergences which are there on the top of the market, if you compare the highs, didn't work at all. But looking at the divergence, if you have seen multiple divergence, you will be completely bearish and you're looking for a big crash in the market, whereas market went and made a new high. So the same chart, most people are looking at divergences, and the same chart, if we are looking at the reverse divergence, then that is the edge we want in the market. We need an edge over other people. And that edge is by going deeper into the tool. I strongly recommend to go in any tool you use. It is not that I have anything to do with RSI. Every tool which is there on the software is very, very good because they have been tried and tested and researched by so many people by so many years. So definitely there is something in it. If that particular tool is not making money for you, it does not mean that tool is not good. It simply means that you don't know enough about it. So what I have decided, I am only researching RSI since last 6 years. I have not seen any other indicator. I don't see any other indicator. I just look at RSI. And now all my trades are based on RSI. Only RSI. You tell me the RSI levels and I can trade. It doesn't matter whether it is silver, gold, Nifty, Bank Nifty, Reliance or anything else. Because I have gone deeper into it and there is much more room into it because I still want to go deeper into it. And as I said, it is founded by Mr. Andrew Cardwell, and he is the guy who is working on RSI since 30 years. And he's still finding and he's still working on it. So my recommendation is to go deeper into any tool you want. No specific like I'm suggesting RSI. You can go deep into MACD. You can go deep into stochastic also. Everything works. So that's positive reversal. Again, one more. You look at the trend which is up. Your point A and B in terms of price is higher, but point B is lower in terms of RSI. That means at point B, RSI got oversold at higher levels. That is bullish for the market. And then it makes a new high. So what is the advantage? As I said, this positive and negative reversal helps you to get into an existing trend. The same thing also is done by range shift. The same thing is also done by reversals. So I am not in a hurry to short anything which is going up, and neither I am not in a hurry to buy anything which is going down. I want to join the trend rather than catch the top or the bottom. If you get this thumb rule clear, never ever you will have any problem in the market. Just go with the trend. Don't try to catch the top and the bottom. That's the biggest problem. Most people, even the most experts, get into that trap and fail badly. So let's look at this. This is positive reversal on RSI on Bank Nifty daily chart. Then this is positive reversal on Euro USD. A to B higher, A to B lower, and it is also, remember, range shift takes support on 40. So it combines both the concept together. Bullish range shift as well as bullish reversal, positive reversal, reverse divergence. Now we look at the negative reverse divergence. Same way, here price does not make a new high, but RSI makes a new high. That means I applied greater force, greater power, greater pressure, greater momentum. In spite of that, I am not able to cross A. That means it is bearish. And again, it appears in a downtrend only. And that's the best part. Let's check one chart. Look at this chart where price is making lower tops, RSI is making higher tops. That means it is getting overbought in a downtrend, and that's an excellent opportunity to short at point B also and at point C also, because you have a reverse divergence. If you check the bottoms like you check normally, you get normal divergences also, and those have not worked only in this chart. Market kept on going lower, lower, lower only. So that's negative reverse divergence. Again, trend is down. A to B price is lower. A to B RSI is higher. A to B price is lower. A to B RSI is higher. And again, market kept on continuing going down only. So in this downtrend, only I am looking at is rally to short. Rally to short. Trend is down. A to B price is lower. RSI is higher. So RSI is also taking resistance at 60. Remember range shift. So both are confirming each other. Excellent opportunity to short with very, very low risk. Again, same thing. GBP USD. For me, the name does not matter. I have been trading these international currencies also, gold, silver also, commodities also, and equities also. I rarely bother to see the name of the chart. It does not matter. I look first look I give it is to RSI. What the RSI is saying. Then I look at what the stock is, whether it is an ACC or a Ambuja or a Tata Motors, does not matter. So that's the whole thing we would be covering in this 1 hour session. As I said, this is too small to do it. That's my website and that's my number. If you have any queries on technical analysis, on trading, on RSI, you can always mail me. My mail would be vishal@malkansview.com. And if you have any queries on anything on markets, feel free to get in touch. And now we can have question and answer. If anybody has any question, it would be my pleasure.
Guys, we can take the questions now. So if anyone has some query, I think we can directly check with Vishal. Vishal, we have some questions on the right hand side. If you can first.
Yeah, I can see that.
Yeah.
You have to go from weekly to daily, from higher time frame to lower time frame. So your weekly has to be bearish, which is below 40, and your daily has to come to 60 to get you a good shorting opportunity. You can trade the same way in intraday also. For that, you can use hourly, 15 minutes and 5 minutes. Your trend, your hourly has to be bearish, your 15-minute has to be bearish, and then on every 5-minute rise, you can short. Remember, if you use 3 time frame, it's the safest thing you can do. And the difference between 2 time frames, which is from daily to weekly, weekly to monthly, is 4 times, 5 times. So it should not exceed 6 times. Means you can't use 5-minute and daily. You have to use 5 and 15, 15 and 1 hour. 1 hour and daily, daily and weekly, weekly and monthly. So all are in the range of 5 to 6 times. So that should be an ideal way. If you are using commodity charts, there you should not use hourly, there you should use 4 hourly, because commodity charts are open, or commodity market is open for 16 hours. You can see at the end of the day also, if you are using weekly, daily, weekly, then you can take the trade on the next day also.
Could you please repeat the time frame for intraday?
5, 15, 1 hour, or 15, 1 hour and daily.
Alright, thank you.
Positive reverse divergence was there today on, there is positive reverse divergence on Irwin Mill today. It was there. If you see, there is a positive reverse divergence A to B and A to B, and today it traded positive. That confirmed the reverse divergence, and that was an excellent buying opportunity because it was also taking support on 60. So that's positive reverse divergence. As of now, we don't have those bearish stocks, so we cannot have those bearish reverse divergence on the market. I am right now not linked to my intraday chart. It's in my office, so I would not be able to do that. Difficult to show intraday chart as of now. It's on the other PC, which is in office right now. Mostly I don't recommend or I don't encourage people to trade intraday. I have been an intraday trader for 7-8 years and successful. But since I have found all this, I think that if we can make more money by trading less and using less time, then why not? You can do other things in the other time. Like I do so much of training during market time also. Yes, of course, if you are buying at a 40 support, then for a break of 40 is your stop loss, and if you are buying at a 60 support, break of 60 is your stop loss on RSI. Are the guys on YouTube can ask the question?
Yes, Vishal, I'm checking on YouTube also.
How many are there?
As of now, we have 52.
Oh. Closing basis, I showed you so many charts, right? I showed you so many charts on grain shift. Currently, we had Arvind Mill, we had Tata Motors. All are bullish. 5-star category.
Sir, can you hear me?
Yeah.
Hello. Hello.
Yeah, I can. Yes, I can hear you.
Sir, my question is that which one is our stop loss? Is it closing basis or highest high or lowest low?
It should be closing basis, because what is the reason for you to buy is 40 support. If RSI does not close below 40, then your reason is still valid. Remember one simple thing for all your trades is you have certain reason to buy. Once that reason is out, your trade should be out.
Okay, okay, sir.
This is
Vishal.
just 20% of what RSI, what we do. Yeah, tell me.
Yeah, I have some queries on YouTube. So one query is with Mr. Ajit. He's saying, what would you do if you see reverse divergence when RSI is at 30?
Reverse divergence at 30, first of all, would not be possible, and if it is there are certain rules for reverse divergence, that it has to be in certain area within certain number of bars, and it has to follow certain other criteria also, which I think which will take another 4 hours of session to explain all those charts and all. But definitely at 30, I should not be looking at reverse divergence. I should not be looking at positive reverse divergence. Because the very fact that if it is at 30, below 30, the first thing what I look at for a buy is my chart has to be above 60 or at least above 40 for me to have a buy. If it is below 30, it is a downtrend. Then I am no way looking at a buy. So if you combine both the tools, range shift and reverse divergence, then it will filter out many of your wrong or false trades.
Okay. So another query by Mr. Pratik, he's saying what strategy is best for beginners in intraday?
First of all, if you are a beginner, you should not be trading intraday. You should be using end of day chart. Get the hang of charts. Intraday is too fast, too noisy to deal with initially. It is difficult for even after so many years also it is difficult to handle. So I don't recommend intraday, especially for beginners. You get into end of day chart, do small trades, paper trades, mock trading, and do back test the things, and then get into intraday. First, you have to get mastery over those long term charts. Then you can get into intraday.
Okay. Another one is by Deepak. He's saying, sir, can you please suggest some intraday technique?
Everybody is interested in intraday. I don't know why. First of all, if you are, there are two ways. Whether you are here to survive or whether you are here to make big money. So if you are here to make big money, there are two ways. If you do intraday, you have to really trade big. If you can trade 2000 or 5000 Nifty and take out 20 points, then that's worth doing it. And if you are doing 100 Nifty and taking 20 points every day, then you are wasting your time and energy and giving brokerage to the broker. So if you are really on for a big trade, if you can handle that mentally, financially, every way, then only you should do intraday. Otherwise, you can do 100 Nifty and wait for 300 points move on a daily and in a weekly basis, which will make more money in the long term. It is applicable to 1 minute chart also.
Okay. Another one is like, can you suggest some good software to recommend to apply this RSI?
Absolutely, any software is okay. Absolutely, because you just need RSI, which is a basic tool which will be there in every software. RSI is the most basic tool which you find. And what you have to do is, instead of that 70-30 overbought oversold line which comes by default on your software, you have to change it to 40-60. That's it. You can use any software. You can even use the net if you are allowed to change those 40-60 levels. Don't recommend any special software for it, because it is the interpretation which is important, not the software.
Okay. Another one is like, give some strategies with RSI with trend following moving averages.
What we used as a 5-star buy, when your both two RSIs are above 60 and the third RSI is near 40 levels or vice versa, is itself a strong trend following system. You don't need to combine an moving average to it. If you combine more tools to it, it only gets complicated and it influences, and your entry or exit gets delayed.
Okay. And next one is, should we keep some filter while taking trade?
Filter would be price confirmation, which is best given signal by candlesticks. So as I said, I have gone deeper into candlesticks also. I've done personal training from Steve Nisson, certified by him. So a candlestick is a very good tool which you can identify. If you are near 40 and if you see a bullish reversal pattern, and that's a confirmation for me. I don't need to wait for another day. I can trade on the end of the day, or I can take the trade on the next morning.
Okay. What is the ideal stop loss in percentage basis?
2%.
Okay. Another one is, can you recommend some good material for RSI?
As I said, on the things which we covered today, there is no book. There is no book written by Mr. Andrew Cardwell, and There is another small book which is having some part of it called the RSI Complete Guide by John Hayden, and it has those reverse divergence funda in that. But again, John Hayden is supposed to be a student of Mr. Andrew Cardwell only. So that's a very thin, small book of 100 pages. You can check that, maybe available online also. If
Okay. Next one is like, Vishal, can we apply the RSI in other exchanges like commodity currency?
Absolutely. As I said, I trade in all the markets, which is 24-hour on. I trade in international currencies also, and I use only RSI.
Okay. Another one is by Santosh. He's saying, can we apply this RSI with divergence, or the three things all you suggested, or only the divergence, and what we need to apply all the three things?
No, you can apply only the range is going to be enough. If you apply range shift, that's the best. And if you get reverse divergence, that's the icing on it. But I would suggest that you go, if you go with the range, which I suggested as 5-star category, then there are very less chance that you'll go wrong in the market.
Okay, it's on the same query which we had. The person is saying that idle stop loss you said is 2% is on daily basis. What about an intraday basis?
0.5%.
Okay. I'm just going through on the YouTube, Vishal. If you guys have any queries, you can directly check it with the people who are already are on Hangout. I believe they must be having the mic with them. So this is the best time we can have Vishal with us. So I think take the opportunity.
Yes, trend line on RSI works. Again, you need to have those trend line ka funda clear. The trend line, a good trend line and a bad trend line on price, and good trend line and bad trend line on RSI. So you can draw trend lines on RSI, it works. And I'm not sure of Metastock because I'm not using Metastock. And I also don't use Scan because my forte is only trading derivatives. So I trade within that 140 stocks, and in that 140 or there are some illiquid counters, some are penny stocks. So it comes down to only 100 and 110 stocks. So I prefer looking at the charts by my eyes, naked eyes, rather than scanning for out of 100 stocks, because I'm not, as it is going beyond 100 stocks, it just takes 30 minutes for me to see those 100 stocks every day. Of course, that 30 minutes has come after so many years. If you look at 100 stocks right now, it might take 3 or 4 hours also. At one point of time in my life, 10 years back, I used to sit for 8 hours on those 100 charts. Now it has come to 30 minutes.
Okay, another query by Santosh saying, any specific criteria for identifying momentum peaks?
Momentum?
Peaks.
Momentum picks means if you want to trade a momentum stock, it's the same thing what I said is a 5-star buy, because your monthly, weekly are very strong and your daily is at a very strong support of 40. So once it goes up, it will be a very strong up move, like we saw in those Reliance Infra, we saw in Hindustan Lever, we saw in Tech Mahindra. So those are the best momentum trades which can do.
Okay, is it possible for you, Vishal? Can you share the view on Nifty for another 10 to 15 days?
Absolutely sideways between 6,000 and 6,250.
And
I
one
don't
query,
trade, I haven't,
yeah,
I
yeah, please go
haven't
ahead.
traded Nifty. I'm not trading Nifty. I have not traded Nifty since last 2.5, 3 years. I trade only Bank Nifty, and as of now, that is also looking sideways. If you look at the range of all three RSI of Bank Nifty or Nifty, all three are within 40-60, and that means all the trends are sideways. One trend has to break 40 or 60 at least to give me some momentum on up or down.
Okay, one query which I have, Vishal, is what about the success ratio of using this RSI?
My whole
How much is
trading
it?
desk, is dependent on RSI. My all the students, I only teach RSI for 3 to 6 months, where we do this mentor program, where we charge that 7.5 lakh rupees per student. Only teach RSI. Of course, there are a couple of more things, but more stress is on RSI, and we have it's been making money for us, for me, for as well as my students. Of course, I complete dependence on this. And what I believe is that if I can't make money out of RSI, or if I can't make money out of market, there is nothing wrong with the market. There is nothing wrong with the subject. There is nothing wrong with the tool. If I can't make money, it is my fault, because somebody else is making money. That means it is working. If it is not making for me, that means I have to work hard.
Okay, another one is it possible to share this PPT?
I think this video is getting recorded, right? So
Yeah, we are
you
recording.
can see the video as many times if you want. It will be put up on YouTube, right?
Vishal, we have some queries on the right hand side if you can check those.
See, again, we have to go deeper into candlestick to find out for intraday. One key candlestick pattern would be what is like a key reversal. Is like when a candle makes a new low but does not but closes higher than the previous candle, is like a key reversal, and the same thing on the top. That's an excellent way to trade even intraday as well as daily.
Okay, another one
I
is
would
like,
definitely, yeah, go ahead.
okay, where can we follow your trades?
My trades, only if you
Yeah.
become my student, because I trade live with them. I don't share my trades, neither I have any advisory service. I can teach you how to trade, but I don't advise people, because I think advising creates more problem for me, because when I give my view, it becomes more problem for me to change my view when market changes. You may not remember also, but it gets into that ego or that pride problem. So, and more or less we are following trend following things. So today I might be bullish or sideways, but tomorrow if the level breaks and I have to go short, then I have to go short. So no fixed views. That's the main problem in the market. So I strictly resist myself also to create any strong view on the market. You should be flexible. As market turns, you have to turn.
Okay. And in the case of Tata Steel, is it negative divergence?
Tata Steel. Are we looking at daily chart? There is no divergence as of now, but I guess there is positive reverse divergence as of now in the market. But I am sorry, but I don't have the latest data of today. But it was a positive reverse divergence as on today. If today market has gone up, then it should be bullish. I guess it was up today.
Okay. Another one is by Mr. Prakash. If possible to use Bollinger Bands on the RSI?
Absolutely. Bollinger and RSI are the best combination, I would say. We do that combo. But I take RSI as primary tool and Bollinger as a secondary tool, as a supplementary tool. So if you are not using Bollinger, there is no harm. You can use only RSI in trade. But in certain cases, in some stocks or some particular trades, Bollinger gives you a leading indicator.
Okay. Another one is, what would be the exit point once we enter an uptrend?
If RSI resists at 60,
Okay. I think we had taken this question earlier, query by Mr. Santosh, but by peaks, what he meant is any criteria for identifying tops and bottoms on RSI for spotting reverse divergence?
Okay. Uh, for top, if you want to catch the top of the market, so it is, listen to me carefully. Whenever there is a reverse divergence, which is bullish, and if the reverse divergence targets are not met, and before that the trend changes or before that the trend line breaks, that means the trend has changed, and then you should look at normal divergence which we have been used to it. Now this is slightly difficult or difficult to understand because we have not discussed the targets in this because lack of time. Every reverse divergence has a target to be met. If the target is met, that means the trend is going strong and very good. If the target is not met and before that the trend line which is preceding it gets broken, that means reverse divergence has failed to meet the target. That means the trend is getting weak, and then that could be a shorting opportunity. Of course, it will be difficult to understand the way I said it. I need more time to explain that to show some charts, but we can take it in the later part if we can do a part 2 of this session.
Sure. By Mr. Prakash, which is the best level to enter by using RSI?
Either 40 support or 60 support.
So guys, we covered almost I think every query, and if you guys have any other queries, you can either post on YouTube or on Google Plus, or the people who are already on Hangout. I think this is the best time because
I would just
Vishal,
suggest
yeah.
one thing is that I am not so much of a Google Plus or a Hangout person. You can send me your queries by mail, or yeah, mail would be the ideal thing, or you can put up on Facebook chat also. So I'm not very conversant with Google Plus. This was also slightly different for me, but definitely I'll whatever queries I get, I'll try to reply, and you can put your email ID on my website. There is a box there, so we come out with a report every quarter or every 15 days or 1 month on any one particular stock or a commodity for buy or sell, and most predominant indicator in that would be explained is RSI only. You can check some of the past reports which are there on the website. So every time I generate a report, you'll get it, and you can also attend my seminars, workshops, whatever we conduct. You can see the training calendar and whatever if you are interested in any of them. And any query on technical analysis, any query on trading, any query on RSI, feel free to get in touch. No problem.
Yeah, thanks Vishal. Thanks for taking this webinar. I think this will be a great hangout for all of us. And guys, we are already on stock market webinar, so you can post queries there itself first. I think Vishal is also with us on that page. So I think this is a great webinar for all of us. He usually, as he already said, that he usually charges somewhere around lakhs for this webinars just to take sessions on RSI, and we have this session free of cost with Vishal. So I think this is the best time to take this opportunity. Thanks a lot, Vishal, for this opportunity.
Absolutely, my pleasure. And I would suggest that we want to get this thing bigger and bigger. So right now there are 60 people. Maybe we want 100 plus people in the next webinar. Maybe whoever it conducts. So I would recommend to put some feedback on the page, on the group, so that more people get attracted and more people attend the next webinars conducted by any expert whoever comes. And I had a pleasure talking to you. It was wonderful, and I hope you got value out of your time and effort which you put in today. And we'll see you in some other seminar or webinar. Till then, keep rocking, keep trading, and make some good money. Thank you.
Thanks, Vishal. Thanks a lot. Thanks, guys. Thanks for joining. Good night.